But now let's bring in George Tsilis, senior markets correspondent here. George, we're talking big tech and the Magnificent Seven. Tesla maybe getting pushed out of it. Stock's down about 11.5% so far this year. What's going on with the troubles here for this company?
Well, I mean, you go back just a couple of quarters, they denoted as a company that gross margins were expected to fall for the remainder of 2023, and they have by about 300 basis points. They're cutting prices to, of course, compete with some of the Chinese EV manufacturers. I think sales in the United States had slowed down just a bit, and that's causing some troubles for Tesla. But they still have the majority market share in North America with 75%. So that's really compelling. I think if you look at the delivery numbers also for Q4, 485,000 units. For 2023, they actually hit their numbers at 1.8 million units delivered. But the challenge is margins have actually fallen as a result because they cut prices. So what they've done in the past few quarters is sacrificed margins to increase volumes. That seems to have been working out. But again, going forward, I think there's some improvement from an earnings standpoint for Tesla. Just going back 2 quarters, just give you an idea of how cutting prices has hit margins. They were estimated to earn this year $3.95, and now it's down to $3.18. And the stock has reflected that. I think in the last, at least year to date, you can see the stock is down 11%. I think there's some concerns, and I'm going to throw Apple in there too because it's not performing well this year with China. We see some smartphone sales struggles in China. Apple's cutting prices. Tesla also cutting prices. They're facing a lot of competition in China, and I think that's what's been putting pressure on this particular name. Now, lastly, I'll say this. Even though gross margins are down about 300 basis points in the past year, that's to be expected. Their net income is over 11%, and that's, again, above their 5-year average of 5% still. So they've gained scalability. It just happens to be that they've sacrificed some near-term profitability to cut prices and increase market share.
Yeah, they're definitely the leader in this space. They have that ability to dig into their margins because they're still, above the OEMs in here, George. Is this going to be a story here in 2024 about demand? Is demand waning because the OEMs in this space, the Fords and GMs, are pulling back on their investment, but they do have the supercharger network. Full self-driving is supposed to come out also.
That's the thing. I mean, all the ancillary technologies, and I suggest also the charging network. I mean, obviously, the other automakers capitulated and are using the charging interface that Tesla provides as a market standard. That's very compelling, I think, for Tesla as additional revenues. I think their solar business, which is a small business, that might have been struggling in the past year, especially with residential solar installations down because of existing home sales not necessarily very robust. But I do think, looking at the values, just the earnings estimates, if the analysts are on board or on consensus, the last 2 quarters look like the low point. So I'm not saying it's, a bounce from here. It certainly could be. But I think demand is going to be waning for all autos. But it doesn't necessarily mean that Tesla can't continue to grab market share while that's happening. So that's just something to think about.
Definitely, George. Definitely in the crosshairs here. The stock's still under pressure so far this year. Hit $299 just about 6 months ago. All right, great breakdown here for us in Tesla. That's George Tsilis, senior markets correspondent here, breaking that down.